Hello and welcome to Crypto Weeklies. In this video, we analyze Solana and its token Sol, conduct machine learning based price forecast, regression analysis, and risk based targets. None of the content is financial advice. Let's get started. Solana, from its $120 weekly bottom, has rallied some at price action at around. Currently, you can see over here at around $180. Market cap slightly under 94 billion. Volume at around 6.6 billion. Total circulating supply at around 520 million. Over the last 30 days rallied by about 20%. So if we were to look for any directionality related analysis, this pink line helps understand if all things are equal, if the price has a higher likelihood of going up with time or down with time. The pink line suggests over here, based on Solana's price action since the token launch in 2020, there is a higher chance that prices go up with time than down with time, based on the historical data, seasonal ARIMA analysis, and machine learning algorithms such as LSTM and XGBoost, all developed in-house. All the content over here available for free on cryptoweeklies.com, link on the bottom of your screen. You don't have to pay, sign up, or watch any ads. If in the next 6 months, if there is a bull case in the market, the ceiling per this machine learning model for Sol's price action could be between $186 and about $406. So that's the non-euphoria price target for Sol. If there is a euphoria or 2 standard deviation bull case in the market, the ceiling for Sol shifts from about $200 to about $650. On the other hand, if there is a downturn over the next 6 months, the floor for Sol's price action is at around $110 to $157. In the last price correction, the price did go to this critical level in terms of Fibonacci level space support at 0.382. That's where the support for the price was at around $104. After holding this level as support, that $104 level as support, the price has rallied to that 0.5, the 0.618 at around 164. The next level to watch is 0.786 at $206. This is again all drawn from the 2021 high, although there was a new high in this rally or this market cycle in 2025. It hasn't taken out the $260 high at any meaningful level. Again, there weren't any candle bodies above this $260. There might be a wicks over there, but again, in terms of the 2021 high, that is still intact for longer term price analysis purposes. The key levels to watch to the downside again are coming to a key area of confluence. Again, you can see the 20-week simple moving average, the 21-week exponential moving average in this red line and the green line are coinciding with this 0.618 level at around $164. So that is a key level to watch to the downside. In terms of this machine learning based price forecast, though, you can see if you want to see in a tabular format at the bottom of your screen, and also how they are calculated is described in this on this page, so you can take a look at that. Again, the most likely scenario at this point in time, again, that is just an interpretation of all the models, is this yellow line. Again, if the prices tend to follow this yellow line or try to overshoot the yellow line in coming weeks, then the orange line makes some worth some notice. Right now, in this 1 standard deviation recovery mode, you can see the angle of incidence over here for Sol is more similar to this yellow line than the orange line, which is kind of a vertical lift off. Again, today the market has cooled off a little. You can see the overall market is down 1%, volume is down, and still the market cap is nowhere close to $4 trillion. It's still hovering between 3 and 4 trillion at this late into the post-halving year. Fear and greed is at around 76 on this on this website, CoinMarketCap. But again, my website cryptoweeklies.com conducts social media based price sentiment analysis. Over here you can see under the crypto TLDR, if you click on over here, it says what are the popular narratives over the last 24 hours and what is the overall sentiment score based on that narrative, it's a 50-50, not too bullish, not too bearish. If you want to read into the popular narratives, you can check them out on the narrative cloud or narrative word cloud. It says right now, again, Bitcoin has taken the center stage. Again, there are some bearish narratives popping up here and there, although coins such as Solana and Console, again, they are present on this narrative cloud. Their size is on this narrative cloud speaks volume of their presence over here. Most of the stock related pullback is discussed again. mm, and most of the bullish narratives are still in force, but there are some bearish narratives. So again, not a clear cut indication that bulls are in control, or if altcoins are outperforming Bitcoin, or discussed more on the social media platform. It's still Bitcoin time, especially with Bitcoin's all-time high as of yesterday. If you look even further into the regression analysis for Sol, the fair value for Solana and Sol is at around $217 per this polynomial regression based model. If you try to add bands to this polynomial regression model to come up with, if the token is sufficiently undervalued, you can see whenever the one standard deviation residual is hit on the downside, the price below this green line or close enough to this green line makes a good dip buying opportunity, historically speaking, again, not financial advice. And we were here not too long ago, late March and early April of 2025, when the price of Sol was very close to this green line. Again, this is not some retroactively drawn line. It gets updated every day, but the shape does not change, historically speaking. So right now, where is Sol? It's closer to the fair value, but not at the fair value. The fair value is at around $211. This time around, the price is at around, you can see over here, 179. So some wiggle room, about $30 wiggle room between the price and the fair value. If you were to draw a similar one standard deviation residual to the upside, together this yellow line and the green line, price stays about 68% or one standard deviation times in this bounds. Whenever the price is in a, or market phase is in a euphoria case, the price beats the yellow line like it did over here in April 2024 and in September, October through February 2022, 2021 to 2022. So last quarter of 2021 and first quarter of 2022. That's where the price challenged and broke outside this yellow line, close to that two standard deviation residual, or this orange line, which tries to capture the euphoria phase. Anything above the orange line is a blow off top. Similarly, the opposite is whenever the prices are below the green line, they represent a panic scenario in the market where the prices are below the one standard deviation residual to the downside, signaling a bottom or a panic in the market. As we go to the two standard deviation, or the dark green line, that's where major bottoms for Sol have occurred. Right now, if the prices were to go and swing back to the yellow line, they represent a price target of about $450, roughly speaking. That could be the peak for Solana and Sol for this cycle if the shape of the regression function moving forward does not have an upward bias. Again, you can see there is a flattening over here happening. On the other hand, if the price action stays bullish and tries to break out the yellow one standard deviation residual, the two standard deviation residual for Sol takes the price to all the way about 940. Again, that's an outlandish target somewhere between the yellow line and because you can see the last time around price barely beat the orange line in November 2021, and as the asset matures, again getting that move 3 standard deviation 2 standard deviation up from the fair value becomes more and more difficult. So this time around, the ceiling in the euphoria phase could be somewhere between an average of this $900 and $450. So 1,350, if you divide it by 2, you would get the ceiling somewhere at around $675. So that could be all for Solana in this bull run. Again, at 675 Sol from the floor of about $10 would not be that bearish, all things considered. You can see over here the 2 standard deviation ceiling for Sol per the machine learning model is also at around 650 area of Confluence. If we look at the Fibonacci levels, the 1.618 is at around $417. So that signals again a $417 is close to that 1 standard deviation residual analysis over here on the machine learning based model. The 2.618 is at around $670. Again, major area of confluence amongst these models. Again, they have no similarity in terms of the data usage. They are all distinct models, but different models are sharing a similarity. Again, the 3.618 is at around 922, as the 2 standard deviation regression model had a ceiling at around $940. If you look at the regression based estimation, the orange line that we saw over here at around $925. So again, major areas of confluence over there. The looking at the current risk using the DC or the regression based model applied price color coded with respect to the risk levels, still less than 10% or around 10% risk. If the risks were to go to again this and intermediate area between, let's say for Sol, the risks anytime between 30% and 40% do signal at least a heightened interest in the market. Again, if the prices were to go to between 30 and 40% risk, price of Sol could be between $308 and about $375. That's the intermediate target for Sol. If you try to extend it to 50% risk for this model, the ceiling is at around $450, confluent with that 1 standard deviation machine learning forecast, the 1.618 over here on the Fibonacci level, and the 1 standard deviation regression based estimation. So all of that, again, if you want to draw a peak regression line through Sol's price action and take into consideration where the price could meet the dotted red line, that level is at around $650. Again, major area of confluence between the 2.618, the regression based dotted peak regression 2 standard deviation residual, and the also not least at around this 80% risk, where the peak could be at around 0.8 risk for Sol. Going forward, the time weighted average price model did help identify the accumulation phase for Sol from May 2022 till November 2023, when the price was sub $50. Again, at one point at less than $10. Now price is 18x from that price. If we look at some of the risks where the peak have meaningfully occurred, it's usually when the time weighted average price risk is higher than 80%. Right now it's at around 63%. All in all, if we were to look for Solana's, again, before we go to the estimated bull run target, we'll briefly cover Sol's simple moving average based risk. This model helped identify the accumulation phase back in late March, early April of 2025. Again, you can see that time whenever the risk was lower than 20%, again, since early March till about early May of 2025, that was again, at least in 2025, a good accumulation phase. Again, this was essentially a dropping knife or a falling knife from 2020, entire 2022 till early 2023. So again, no model can predict exactly. So that's for all seasons. That's why we have a plurality of models, each dedicated for a different task on the website. Again, if we look at an intermediate risk level for Sol per the SMA model, between 40% and 60% risk, to if the prices were to go to that level per this model, that would be somewhere between $230 and $260. This is a shorter term model, 20-week look back based model, and this is signaling slightly shorter term peak at around $260. That could be the resistance between that 0.786 to 1 level at in terms of Fibonacci related levels in the shorter term in the next 20 weeks. In terms of the estimated bull run target for Sol, all things considered, the regression risk being fairly low at around 10% or 0.10, time weighted average price risk at around 62% or 0.62, SMA risk at around 30%, weighted risk is at around 30% also, as a weighting of all the three individual risks. Again, they are heavily geared towards the regression risk. Estimated bull run peak for Sol, if the models were to say weighted risk of at around 95%, peak bull run for Sol per all the risk based model is at around $580, representing a reward of about 3.2x from the current price. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.